Budget 2021 is set in a very uncertain world. Firstly, the US-China trade tensions. Secondly, US elections in November, which will then determine whether the US-China trade tensions would re-emerge. Thirdly, the global pandemic and whether a vaccine is available soon. Nonetheless, the government should recognize that post-COVID-19 world is going to be significantly different from pre-COVID-19 world, so it is an opportunity to embrace digitalization, embrace sustainability as a way to develop the country. Budget 2021 is likely to focus on alleviating short-term pain as well as to prepare for long-term recovery. In the area of alleviating short-term pain, certainly subsidies and low interest rate environment is going to continue. In the area of preparing for long-term recovery, digitalization initiatives are likely to persist and accelerated, and making Malaysia as an attractive investment destination is likely to continue. This is important given the US-China trade tensions, and thirdly, in maintaining Malaysia's competitive edge in certain areas such as in glove production as well as in electronics. On the last area, potentially might be included is how to embrace sustainability in the development of the country. And this sustainability ought to go beyond environmental issues to cover social coherence, women's rights, and good governance. So for far too long, Malaysia's emphasis has always been in hard development, and we can see that how much capital is actually being trapped in real estate sector. So, but the problem with soft development and sustainability of these is that it is pretty long term, and the results is only visible in a much long-term period. Certainly going to be initiatives to help the B40. It is hard to imagine that there's going to be none. Politically, the government is very weak given the small majority that it commands in the parliament, so an election might be held at any point in time. So the challenge is actually how to get B40 to embrace the new economy, how to create value with technology rather than consuming technology, how to actually increase skill sets, which is very hard to achieve in the short term. So in the short term, it's more likely to be hiring subsidies that will include some sort of on-the-job training. On the longer term, what is important is to recognize that Malaysia cannot adopt the same old techniques that has helped it in the past, and it needs to embrace the new economy and the new way of doing things, and that globally sustainability has really moved up the agenda in lots of places, and how Malaysia should and ought to be embracing sustainability as a whole as part of the development of the country. This pandemic, unfortunately, some M40 has actually dropped back into B40. So the budget is likely to be B40 focused nonetheless, given the political situation and the risk of social unrest if it doesn't do so. Subsidies are likely to come in helping alleviate the short-term pain, such as in pre-Hatim packages, hiring subsidies, and they need to be targeted and with fast decision and fast turnaround. Term types of subsidies are likely to be investment focused to enhance the attractiveness of Malaysia as an investment destination, to maintain Malaysia's competitive edge in whether it's glove production and electronics, and in helping businesses transition to the new economy in terms of digitalization of their businesses, supply chain, and finally how to actually make Malaysia embrace the sustainability agenda that has been high up in the global agenda. Stimulus packages so far has been one of the highest in the world as compared to the nation's GDP. Money is certainly going to be the challenging part. Malaysia is now suffering from low oil prices as well as low economic growth globally. Money is likely to come from multiple sources. For example, potentially a windfall tax on companies that have made bumper profits, more aggressive tax collection, higher stamp duty given the increase in stock market volume, and certainly the case of more innovative type of quantitative easing that central banks in the world have all been doing.